my litmus test is always if a cab driver can talk about Shark Tank and tell
Absolutely.
me the nuances of
Yes.
Shark Tank, that means it has really
Correct. Made an
gone down,
impact. Yes.
made an impact. So yeah, that's positive. But the negative is then there is so much focus on funding only.
Mhm.
Capital is gives you leverage to do many things around the idea, but there are many other components which are like 80% of the founder journey, so to speak. So do you think that we are putting a lot of weightage around funding but less around innovation and originality of the ideas, etc.?
I think that's definitely a problem. And I think the funding often tends to chase trends, right? And that means that everything in the world right now is trying to chase your Q-commerce booms or e-commerce in the past or payments, fintech in even before that. And that becomes a problem because then you get a concentration of all startups trying to do the same thing. And then real problems just get ignored. Nobody's trying to solve the unsexy thing that nobody wants to fund, right? So that definitely is a problem. But I think that is where markets come in. And you will see that when nothing else works, markets give you a self-correction in a way. And I'll tell you how, right? Now, 2020, 2021, when we had sort of the funding boom cycle, everything was getting funded almost in the same spaces, and D2C was sort of the big deal then, right? So D2C में कुछ भी आएगा, हाँ, India is a large market, demographic, this, that, same story. Everybody got funded, cash burn was cool, you want to just acquire 1 billion customers and then you will sell to them something and you'll make money. That was the story. So CAC was cool, spending was cool, burn was cool, as long as you're acquiring customers and you're telling the next 20 years story. Then markets happened, right? COVID happened. Some businesses just died because they didn't exist anymore in a quarantine world, right? And all of that happened, and people realized that you can't constantly fund for cash burn. You've got to fund models that actually know how to make money or have a clear path to profitability. And today, profitability is probably the biggest buzzword in any sort of early stage investing as well. So either are you profitable or what is your path to profitability is the key big question. And so I think the funding follows cycles. It doesn't necessarily predict themes the right way, but it self-corrects also. And so from everything that got funded in 2021, I think a bunch of them are now facing closures in 2025. But that means that the next leg of startups that are getting funded have more stronger fundamentals because they've learned from their predecessors' mistake. So it's almost a self-teaching cycle, right? Startups will make mistakes. 5 years down the line, the next cohort will learn from them and then they'll get better. Same way for investors, they'll learn their lessons that you can't just keep chasing a trend.
Yeah.
And I think in early stage investing, one thing people forget is you can't, as a pre-seed investor, invest in today's trend because you already missed it. Pre-seed investor of today is going to be chasing a trend of 10 years from now. Because if Q-commerce is hot today, the guys that actually invested in it 8 years ago as a 2017 founded company are the ones that are actually reaping money. So trends of today are never for early stage investors. Trends of today are for equity investors. Ki haan, sentiment pe this will go up. But pre-seed or angel investors have to spot trends before their trends. And I'll give you an example of Nvidia right now. Back in the day at Goldman, I was just sort of having this casual conversation with a couple of folks, and they were like, what's one stock you're looking at for a personal investing perspective? And this is 2018. And I was like, Nvidia is something I own, not a huge position, but I have something, but this is interesting. He's like, why? What is the thesis? I'm like, very simple thesis. No, nothing grand. But the fact is, everybody's talking about AI today, autonomous cars, this and that. People were starting to talk about those things then. I was like, if AI has to be reality at any point, there's just one company that's building for it.
Yeah.
The GPUs are only with NVIDIA. So if AI is the future, then NVIDIA is the company. And back then I had a very small position, jitna I was allowed to compliance-wise, right? I had a small position, and what happened the next year was the semis supply chain thing broke. All car companies delayed their orders by 6 months because semi chips nahi available thi, right? And so NVIDIA went down.
Yeah.
When there is no supply chain, then how is NVIDIA going to make chips, right? So all that happened, shortages happened, it went further down. I doubled up my position, right? And that was a very simple thesis again, ki NVIDIA, AI, if AI works, NVIDIA works.
Yeah.
Fast forward to, I think, 2023, June or something, the first pop happened where I think NVIDIA had a 40% increase in their earnings purely because of their AI sort of thing. And that was when the world realized, oh, AI is a real thing. And unfortunately for me, I exited. Then I was like, okay, 40% is too much. And the stock went up, I think, 2 days, mein 40-50%. I was like, I'm 10x already. In 4 years, I'll get out. I sold it. It went further 50x from there. That's a whole other story. But the reality was, the fact was very simple. If AI is a story 7, 8, 10 years from now, the only company building GPUs for that is Nvidia. So Nvidia will fly. Now today, you see a $5 trillion company in Nvidia, which is more than almost every economy in the world apart from two, right? But the fact that this happened was very clear in terms of the thematic. Now you've got to be the same person as an investor in early stage startup. So electric cars are everything today. But if you took an EV bet in 2015, thinking that, okay, environment is happening, issues are happening, Tesla is this company producing EV cars in the US, but nobody else is doing electric cars, you've got to think that, okay, electric cars must be the future. So find this small company that's doing something around EVs, take a bet. In 10 years, you'll have made money. So as an early stage investor, your biggest challenge is to look for the themes in the future. And hence, I think that part is almost missing in our funding ecosystem. Our early stage investors are also taking trend based calls. Ki, this is proven, this is happening, I'm going to take a call. Invariably, they're going to fail in 5 years because that trend will be past.
Right.
So I think we need a more active and a more forward thinking early stage investing ecosystem.